This is Advisor 3.0, a show designed to help you as a financial advisor elevate your professional practice, transform your clients' lives, and take your business to the next level. I am Abraham Okusoya. Welcome to the show. Welcome to the show, ladies and gentlemen. There are very few people who has made such an indelible mark on not just UK financial services, but indeed UK business scene as my guest today. So I am super excited. He is an entrepreneurial heavyweight who launched his first business, financial services business, at the tender age of 24. And today, that business has expanded not just into other parts of financial services, investment management, but also real estate and renewable energy, with more than 2,500 employees serving some 2.5 million customers. I'm talking about none other than the incredible Simon Rogerson, founder and CEO of the Octopus Group. Simon, welcome to the show.
Wow, what an introduction. Well, thank you very much for having me. I'm not even sure my mum would have been that generous to me if she'd introduced me. So that's very kind. It's very kind. You say something very
No, thoroughly well deserved, Simon. So, but let's dive right in. Most of our listeners are familiar with Octopus and, your journey. But can you tell us the story of how you founded Octopus, perhaps focusing on the least known part of the journey?
Well, I'll start with the fundraising. So you will need a handkerchief because it will be a sob story. Right. So right at the very start, when we didn't have any money, as you rightly said, three of us were 24, 23, 25. We ended up using the Yellow Pages. So we used the Yellow Pages, which, if for people who are too young to know, was a phone directory. We spent 9 months cold calling financial advisors, actually, to say, would you like to invest into this business? And eventually 74 people chose to invest the £2.25 million we needed to get the business started. And in hindsight, that was probably the best lesson we could have learned. So it's taking all a sense of, slight entitlement, actually. I used to work at Mercury Asset Management, which is a big fund management company, very successful. Kind of, you'd have your meetings on the 6th floor. The carpet was thick enough to lose your shoes in it. There was a Monet on the wall, a Picasso's on the wall. No joke, when people brought you a cup of tea or coffee, there was a butler with tails carrying a silver platter with white gloves. And you've joined as a graduate, and you think this is how the world operates. And you go from that environment to, our startup office was above the Costcutter supermarket in Farringdon with 3 other companies. It was all open plan. One of those companies is actually still alive. It's called BigTelly.com. It rents out plasma screen TVs. It has the highest proportion of employees with facial tattoos anywhere in the world. And we had to use the Yellow Pages to get started because we didn't have any money because, we were very young and we weren't wealthy individuals. And that 9 months of cold calling knocks the entitlement out of you. You understand them firsthand, how much hard work goes into building a business because it's unbelievably hard. It's unbelievably difficult. And there needs to be something slightly wrong with you, I think, to want to do it in the first place. And actually, when, our primary customer in the financial services business is financial advisors, and lots of those financial advisors are entrepreneurs. And that creates a bond because actually entrepreneurs tend to respect one another because they understand what you've been through. So probably of all the stories that go into Octopus, but that's probably the one that's least well known, which is how did we actually get off the ground in the first place? And it was, 9 months of cold calling, 9 o'clock in the morning till 5 o'clock at night, every single day. And I've kept 3 pages of the Yellow Pages because I used to write little notes on them. And those little notes would say, never call me again, or I'm going to report you to compliance, or whatever it was. And that's, it's all part of the history and all part of what makes a business special as you build it. And, now the business has changed, beyond all measure. And now when I say I work for a company called Octopus, people assume I work for an energy company. And they don't know it's a bit broader than that. But now the energy company is the one everyone knows. As you said, it's got 7 and a bit million customers in the UK. It's actually got 55 million customers on its tech platform, Kraken, which I'm sure we'll come on to talk about. And I feel unbelievably lucky to do the job that I do, which is, It's about entrepreneurship. I wake up in the morning, desperately looking forward to coming to work, and that's a real privilege. So yeah, that's probably the one story. I've got lots of other
Incredible.
stories, but they're probably not for now. I might have to take you for a drink to tell you those.
Yeah, incredible, just incredible stuff. So the idea at the time is to essentially launch an investment management business in the alternative space. Am I right? Providing sort of EIS, VCT type product
Yeah,
to
I think there are two things 2 points I'd make. When people start a company, sometimes they say, "Look, what was the big vision? What was the enormous mission you were going to go and do?" And actually, right at the very start of a business, it's normally about survival, right? So you
Yeah.
set tiny little targets about survival. It's like, right, you haven't got any money because you haven't got any shareholders, and you don't have anyone, so you've got to do that. Then you've got to get regulated. Then you launch your first product, and et cetera, et cetera. But actually, the reason I left Mercury and the reason I wanted to go and do this, and I was still on the graduate training program when I left, is the least trusted industry in the entire world back in 2000 was financial services. And the least trusted industry today is still financial services,
Yeah.
right? And the second least trusted is energy. And there's a reason for that, is because if I can't understand you, I cannot trust you. And that's what's one of the big things that's wrong in financial services, is there's a level of complexity, there's a level of jargon. Sometimes companies do it on purpose to obfuscate what's really going on. Sometimes they do it to try and look clever. That is not a good starting point, I don't think, right? And that needed to change, right? Because money is at the source of so much choice and so much happiness or unhappiness in life if you don't get that bit right. So naively, age 24, I was like, do you know what? I think I can do it better than that. I think I can create a financial service company which actually does have that trust. And we'll always get things right, but when it gets something wrong, it's going to stand up like a person would and say, do you know what? I'm really sorry about that wrong, and here's what I'm going to do about it. And that I think is a really good test, is personify a company. So if you think about it, if I asked you the question, talk to me about companies you love being a customer of, right? It's a really difficult question to answer, right? Because most of these companies, you'll have interacted with hundreds of companies today, most of them are instantly forgettable, right? They don't have a personality. They are selfish. They are self-interested. They're kind of borderline sociopathic, because it's bottom line focus above everything else. If they were people, you wouldn't choose to be friends with them. And that, if you think of all the financial services companies that are operating in the world, you wouldn't be friends with probably any of them, right? Or hardly any of them, because they don't behave the right way. Since the financial crisis, these companies have paid out $350 billion in fines, right? They've outsourced their conscience to the regulator, right? They've done that, and it's a battle, lawyers to lawyers, right? And that's a battle they're quite happy to play, because maybe they think their lawyers are better, or maybe they think the cost of the fines will not be as much as the money they've made, right? That's not the way to build a business. The founder of all those organizations, if you dug them up, along with many hundreds of years since they set these business up, you dug them up and said, that's your business, that's how it's behaving, they would be appalled, right? Great business is simply how you make someone feel, in my view, right? And those people could be your employees, and they could be your customers. If you remember that above everything else, you'll build a really special business. And I don't think most companies wake up thinking about that. They wake up thinking about themselves. And you wouldn't choose a partner in life or friends in life if that's what they did. And therefore, you shouldn't choose companies on the same basis.
It's incredible. So let's talk about perhaps the best known part of the business, Octopus Energy, which is quite a disruptive force in the energy market. How did that come about?
Right, total serendipity. Total serendipity. We moved into this office, 33 Holborn. It was I think our 7th or 8th office over the last 24 years. I always describe it as our first proper office, right? It's a really nice office. And the guy that ran Boston Consulting Group, a guy called Stuart Quickenden, heard we just moved into this new office, and he heard it was a really nice office. So he said, look, can I come around and have a look? And so he came into the office. I was showing him around, and I said, look, I've been thinking about the energy industry. It's the second least trusted. There's something really broken about it. I'm thinking about, we're thinking about that as a space we might go into. I said, do you know anyone you can introduce me to who might want to be part of building that business? And he said, yeah. So he introduced me to 2 guys. I won't say who they were. One was from E.ON, one was from British Gas. I met them both. They were both dreadful. They were very corporate. No way could they have built anything. Absolutely not right for us culturally. So I went back to him and said, look, they weren't right for these reasons. Do you know of anyone else? And he said, well, this guy I was at university with, he's a bit renegade. And I said, well, introduce me to him. And so Greg Jackson came in to see me. He saw me just around the corner.
Right.
And no joke, because normally when you build a business, you're supposed to have a 50-page business plan and all kinds of stuff, which none of which will happen, by the way. It's like, everyone has a plan until they get punched in the face, was the Mike Tyson quote, which is very, very, very true. And Greg came in 5 minutes into meeting, and I thought, oh my goodness, you are one of those very rare people in life who just bleeds energy everywhere. Unbelievably smart. I thought, absolutely. He said, I want to build this energy company. I said, amazing. That's what we're going to do. At its peak, we had about £155 million of our balance sheet invested in that business. So you never bet the business, but it was a really big bet for us. It was, and we've been unbelievably fortunate. Greg is still the single most talented entrepreneur I've ever worked with by orders of magnitude, total freak. And he's built a business which actually I think people absolutely would choose to be friends with. It's kind of eating everyone's lunch in the UK, 7 and a bit million customers, and 50 odd million customers on its tech platform. It's a technology business at heart. And that's really opened my eyes to what technology can do for a business and how it can make it scale at the same time as deliver brilliant customer service. But it's a remarkable business. I think it will do more to accelerate the world's transition to renewable energy and make that energy cheaper for millions and millions of customers than any other company in the world. And I don't say that lightly. I think it is a once-in-a-generation opportunity. I don't think I'll ever see a business like this again. And to be part of it, largely watching from the sidelines, I'm on the board of it, but I don't spend my day helping to build that business, is a genuine privilege. I mean, I feel super lucky. And when you work with, it's almost like the diary test. You look down your diary and you go, I'm spending time with Greg or his team today. It's like a drug. It's like, oh my goodness. And you'll get this, right? Because you have the same drug, right? It's that smile on your face right now. It's the excitement and the passion that comes from building something you really care about. It's the best thing in the world, right? And that's what people, if you wake up too many mornings in a row thinking about starting your own company, just leave and go and do it, because it will be the best thing you could ever do.
I mean, it's incredible. You put 150 million of your own capital into this, and I mean, it's an incredible success. We'll come back to that later on. But you've now set your eyes on doing to the platform market what you did with the energy sector. Tell us a little bit about Circle and your thinking around that.
Right. So I think there are two things I'd say. The first is just to understand, seeing firsthand what Kraken can do. So Kraken is a technology platform that Octopus Energy has built and uses itself. And this is the thing that allows you to do every bit of customer interaction happens through Kraken. It's one team able to deal with absolutely everything that comes up. Kraken now powers E.ON and EDF in the UK. So it's got the vast majority of the UK energy market runs off Kraken. It does it for Origin Energy in Australia. It does it for Tokyo Gas in Japan. It does it for other utility companies now outside of the energy space. And it's going to get bigger and bigger and bigger. And I'm not sure, it will run hundreds and hundreds of millions of accounts will run off that software. And it shows you what you're able to do. So it's the lowest cost to serve by miles within the energy industry. So that allows you all kinds of efficiency and advantages over other people, at the same time as creating more customer happiness. And there you've got something that's remarkable. So you're the lowest cost, so you can offer the best prices to customers, and those customers are happiest. And you're like, oh my goodness. And as the energy industry changes, where actually, version 2 of the energy market will be one where the customer is paid for the energy they are creating. So the average car battery can power a normal home for a week, right? So now we've got the technology where you can plug your car in, and when energy prices spike, we'll drain your battery and pay you for that energy. And at 3 o'clock in the morning, when energy is almost free, we'll fill it back up again. That will be the future of energy in so many ways, whether it's batteries, whether it's heat pumps, whether it's solar, whether it's electric vehicles. And Kraken, the technology platform, allows you to do that. So they have literally tens and tens of billions of rows of data that they're able to use in a way that gives the client the power and the advantage. So I saw all of that happening in the energy market, and I saw Greg and his team build that from nothing. And then you look at financial services, and the point I'd make here is, where does the value sit, the capital value sit, when you think about financial services companies? Now, normally that capital value sits in the fund management companies and the investment companies. They tend to be the one worth all the money. Right now, that's weird to me, because I don't control or own any customers, right? All the customers are yours, or financial advisory businesses or wealth management businesses. They own the customer relationship, not me. And therefore, by definition, I think they should be a lot more valuable than me. Now, the problem is with some of those businesses is you can look at the very, very large companies and you can look at their IT budgets and their tech budgets, and those tech budgets will be 100, 150 million pounds. Of that 150 million pounds, 140 million pounds will be trying to repair the stuff they already have in place. Right, which is legacy tech. We've made those mistakes ourselves in our own investment business. It's jolly painful. Every business goes through it. And you look at the platform market and you go, well, that's still stuck in kind of 19 whatever, being generous, 1990, 2000, whatever. And there's an opportunity to do something very, very different. And in doing so, in creating that platform, giving the power back to wealth businesses or advisor businesses, say, look, it's your platform. You run it. It allows you to create a different client experience. It allows you to capture margin. It allows you to create value and offer lower customer cost to customer. This is all the stuff that should be at the nub of these businesses. They should be way, way more efficient, and they should be able to capture the value. So that was our starting point. How do we think about this? And then we met Dave, who runs Seckle, and that was not quite the Greg moment, but pretty close to the Greg moment, right? And because he's a remarkable entrepreneur and building something really special. And it's then, is the technology scalable, and does it allow you to do that? And the answer to that is yes. And I think right now in Seckle, you've got something which is absolutely at its inflection point, right? So you invest in this business. We use a lot of our balance sheet to get it to the stage where it's at now, and we'll continue to do that. We take a very long-term view as to how we create value in these businesses. And you've got something that's really special now. It will go from adding, whatever, 100 million every month to adding, in relatively short order, 1 billion a month, because there's real scale in this industry. Just like Kraken's gone from just looking after our own customers to running, tens and tens of millions of accounts. Seckle has the same opportunity. So that for me was the thinking behind it. And also trying to make yourself irreplaceable to financial advisors and wealth firms. That to me is important, right? If you're a product provider, well, I'm one of many product providers and you can use me or not use me. If I have the technology which is the heart of your business and I can create more value for your business, then I'm irreplaceable, right? I'll be at the core center and then you'll use me. The Google founders always used to have something that said it's a toothbrush test, right? Unless you're using me twice a day, which you clearly should do with a toothbrush, then you won't be part of my business. I won't think about you enough. You'll think about me every few months, right? I don't want you to do that. I want to be in your business. I want to be seen as a partner. I want to be seen in helping you to create value. That for me is the bit that's different in Octopus. And because we've got this very, very long time horizon, we're not a public company. We'll never be a public company. We don't have any private equity shareholders in our business. So it means when we make decisions, we can do things like put 150 odd million pounds into an energy company, and we can put tens and tens of millions of pounds into Seckle, and we're going to, and we have. And we'll continue to do that because we take a view which is, how am I going to measure our success? I'm going to measure it over decades. Because I think that's the right timeline to use, not over what happens the next 3 months, 6 months, 12 months. That's just not relevant. So, yeah.
It's incredible. And you already touched on many of the things I was going to ask you, which is like the famous criticism or comments that you hear about Circle is, well, this is a business that's lost X, 10 million last year, lost 20 million, cumulatively. How is Octopus going to stand behind this and see through to profitability over the next couple of years, however long that might take?
Yeah, the very short answer is yes, right? And that's not something that, it depends what kind of business you want to build. Right, so if you want to build a business which is a lifestyle business, then you'll fund it in a certain kind of way, and you'll give it a little bit of money, and that will be okay, and you'll look after a few clients, and that business might make £100,000 or £200,000. That's okay if people want to build a business like that. If you want to build a business which is a genuine disruptor in its industry, then you have to hire world-class talent, and you have to make decisions over the very long term. So why, we funded Octopus Energy's losses for the first how many years, which is hundreds and hundreds and hundreds of millions of pounds, and it eventually outgrew our ability to fund, which is why we have some great big investors alongside us now. They've put now billions of dollars into that business over its life. But we knew that from the very start. Seckle will never be that capital. We'll never need that much capital because it's not an energy business, right? Energy, in the winter, you need to spend billions of pounds buying energy. But Seckle its cumulative losses may be 40 million, 50 million, that doesn't bother me. It doesn't bother me one bit, right? We've made our commitment. I'm very happy to make this commitment to you publicly. Yet this is how we do business, right? We're in this for the long term. I will judge our success in whatever, 5 years, 10 years time. When you come back to me and you say, Simon, you've done exactly what you said you were going to do. Thank you. Right. And that will be making the investment and making sure what we say we're going to deliver, we absolutely do. And that for me is the way to think about building businesses. And sometimes things move in cycles. So venture capital money will chase something, then it'll decide it doesn't like it anymore.
Yeah.
Same with private equity money, right? That's not the way to build a business. The way to build a business is say, can I do something that's in the client's interest? And can I do it over the next 10 years? And if the answer to that is yes, and I want to do it, well, then commit. And don't change your mind in line with what's going on in the wider world, and everything else. And you can see in the relationships that Seckel's building now, and the fact that we continually get asked in all these pitches to come in and pitch, and we can see what's going on in the rest of the platform market and how disrupted it's going to be. It's like playing out almost identically to how the energy market played out. And we've seen once you get the momentum and you land, it's always the most forward-thinking firms. It's the most forward-thinking firms with CEOs who are able to sponsor technological change, right? Because technological change is sometimes difficult. And if the CEO doesn't understand that and sponsor it properly, then it becomes even more difficult. Because people generally don't like change. It's just a fact. We don't like change in our personal lives. We don't like it. So, yeah.
Yeah, no, I mean, like, it means a lot to me when you make that sort of public commitment and pronouncement, because every time people have asked me this and they say, oh, it's Octopus, the Octopus going to back this. Then I said, well, just look at Octopus investment, exclude the energy. This is a business that throws up 70 million of profit every year. You could just pay 14 million or whatever it is to the tax man, corporation tax, or as you're doing, you could invest, 20 million odd in all of your, I'm talking about your last year's account, all of your, interest, including Circle, and it was still net 50 million.
I know I haven't said this publicly, but I'm very happy to tell you. We have a policy internally. So within the investments business, you're right, roughly makes that amount of money. It makes slightly more than that this year. We say, look, we'll pay out 25% of that profitability to our shareholders. Right. And we have about 1,600 shareholders, almost all of whom are current employees or past employees, and those 70 odd people right at the very start, who have clearly done very well.
I was looking at the internal rate of return. It's something like 21% a year. So,
up a bit from that. I'll tell you a story in a minute about one of the early investors because it'll make me chuckle. But we pay out 25% to our shareholders, and the rest is retained, and it's retained for growth. And that's because actually, again, it's about the time horizon. It's about what we're trying to build. If you're trying to build something that's really special, you need the firepower to be able to do that. So our balance sheet needs hundreds of millions of pounds over the timeline we're thinking about to build these businesses. Because if you want to hire world-class talent and you want to scale something to a meaningful size and big, going to make a difference, it needs a lot of investment in it. But one of the stories I'll tell you, just because it's funny, one of our first backers was a guy I was at university with. I was at university, we left and we said, here's what we're going to do. And he said, oh, do you know what? I'd really like to make an investment. Why he did, I literally don't know, because we had no idea what we're doing. And he said, so I've gone to the bank and I've borrowed £10,000. So he borrowed £10,000. Exactly, my compliance team would go nuts. So he borrowed £10,000, but this is the great thing. He borrowed £10,000 off a bank, telling them it was for a home improvement loan. Right? He didn't own a home. So how that one got through, I don't know. But he so far, he and his family have made 200 times their money. So £10,000 is worth £2 million. It's genuinely changed his life. So it changes the school his kids go to, it changes the holidays he goes on, changes the house he lives in. And, every year or 2 years, he'll write to me and say, this is a difference it's made. And that's, at almost every level, whether it's employees, whether it's partners, whether it's customers, if you build businesses in the right way, this is the opportunity. And I think sometimes people lose sight of that. So they lose sight on the timeline you measure success over. There's that law, which it's called Amara's law, I think. Amara's law is when you massively overestimate the amount of change that's going to happen in the short term. Yeah. And then you massively underestimate what happens in the long term. Right. And almost all businesses suffer from this because they go, oh my God, it's the most exciting thing in the world ever. Oh, it's brilliant. And then everyone gets bored. And they get bored and they start to go, oh, it's not going to work. And then bang, in the long term, right? And most businesses is the same thing. And you have to see through that cycle. You have to say, no, I'm in this, I'm committed, I'm in it for the long term, and then you can create something really special.
Incredible stuff. So this is you alluded to it earlier on. It's a topic you and I have talked about before, which is this idea where you say Octopus will never be a public company when you could well be. Why? Why wouldn't you? This thing's doing incredibly well. Why wouldn't you? Take it public at some point.
I personally, and I know everyone's different, right? So you may well have a different view to me, right?
What do I know?
Well, it doesn't. It's what's important to people, right? I have no desire personally to be famous. I love Octopus being famous. I don't personally want to be famous. That's not my motivation, and I'm not saying that is for lots of people who want to go public. We also have. If I was a public company, so if I wind back to 2015, if we were a public company and first of all, I'd have to spend my time going around to fund management companies explaining why Octopus was so amazing. That would drive me bonkers because I'd have to say the same thing repeatedly, and I struggle to do that. But also, if I'd gone around to them and said, guys, do you know what? I've had this cracking idea. We're going to build an energy company. Right? No way. Literally no way. Right? We've got a special needs school business on our balance sheet. We've invested 70 odd million pounds in a special needs school business. And we've been doing that for the last 7-8 years because I happen to think education's broken as well. Right? And people don't know that. And the market wouldn't allow you to do that. And the market measures success over a timeline, which I think is just total nonsense. They measure success over 3 months, 6 months, 12 months. The average fund manager holding period for a stock, I think, is something like, I don't know what it is, 9 months. You are trading. You're not investing. Right? Invest in people. So, if someone was investing in your business, they're investing in you, and they're investing in you for the very long term, right? And what Warren Buffett, my favorite holding period is forever. That's how you should think about things, in my view. And the public market doesn't allow you to do that. So that then the problem comes back and says, well, how do you create any equity value? How do I, almost every single employee, if they choose to, is a shareholder in this business. And that's really important to me because they see themselves in it. They should create value along with everyone else as a business progresses. So how do you create liquidity? Well, we have an annual liquidity event, which is a private event, just goes out to our existing shareholders. And we say, would you like to buy or sell shares? And that's a market that happens. It does 15, 20 million pounds a year in liquidity. And that's a way of allowing people to exit, allowing people to invest. And that works really well. So I think, for some people, floating the business will be right. It will never be right for Octopus. And I'm very happy to go on the record and say it ain't going to happen. It's certainly not on my watch. I do not want to run a public company.
Well, not on your watch. And that's fine to say when you are 40s. No,
do you know what?
You're 40s.
I'm clinging on. I'm clinging on. I've got till June. I'm 50 on July the 19th, but I'm glad.
Wow, incredible!
I know, youthful.
30 in July. That's fantastic. No,
it literally will not make any difference. It won't make any difference to me personally. So money is not my motivating factor in doing this. I'm in a very, very fortunate position. So I can do whatever I want to do in life. I don't spend lots of money anyway because that's not my motivation. And for all the people working here, we can create that liquidity event. So if you want to realise that £100,000, £500,000, whatever, how long you've been here, you're able to do that. And then you can go and enjoy it and change everything else. So for me, it's just, I say not on my watch. And the second point I should have said, and I'm not going anywhere either, because unless someone's got some kind of plan for me, which I won't like, because I love what I do, right? A number of people I talk to, a number of my friends, who are normally, say, quite lawyers, accountants, they don't enjoy what they do. Yeah. They don't enjoy it, and they're on this treadmill, and they can't get off, and they'll get to 60, 70 when they've hung their boots up and look back and go, what was I doing? Literally, what is the purpose of life? Have I made society any better? Probably not. You're trapped. You become trapped, and then that's why experiencing being an entrepreneur is, if you're lucky enough to do it, or mad enough to do it, is really cool. It's super addictive.
So you spun out Octopus Energy, and that's going to go its own path. Do you see that becoming a public company someday?
Oh, do you know what? It's different. It's different, definitely, and you're absolutely right to call it out, because Octopus Energy now has other shareholders other than just Octopus, right? So the other shareholders are Origin Energy, the largest energy company in Australia, Tokyo Gas, the largest energy company in Japan, CPPIB, a Canadian pension fund, in fact, the largest Canadian pension fund. It might be the largest limited partnership in the world, actually. I think it's about $650 billion. And Generation Investment Management, which is Al Gore's fund management company, which is all about climate. And they're very, very long-term investors. And when I say very long-term, it's kind of 10, 15 years plus. But clearly, they have an obligation to their shareholders to return money to them. And so they'll think about it from that standpoint. So that introduces a slightly different dynamic to that business, which you rightly call out. Now, will it be a public company? I have no idea, and it wouldn't be my call to say one way or the other. I mean, I've publicly said what I think. I've got no desire to run a public company, but I don't run Octopus Energy, and it's Greg and his team that have been building it. But certainly not in the short term. There is a whole bunch of stuff to do. What we need to do in that business is get the same scale we've got in the UK. We're in 10, 11 different international markets. We need to get to the same scale there. That business needs to get to 50 million customers in its own right, and probably 250 million customers on the tech platform. And then it becomes a giant business.
It's incredible. I love what you've done. With even the Octopus investments. Because I always think of asset management as, you alluded to this point, like all these companies trading stocks, on the public market, adding very, very little value. Whereas with what you've done with Octopus, which is like putting money directly into sectors of the economy where you want to see a change, and waking up every day backing entrepreneurs to make that change. That's radically different than this like secondary trading of equities.
Yeah.
I don't know what it adds.
Yeah, I'm entirely with you. And what I would say is, I sometimes ask this question of fund managers when I interview them, largely to be irritating, but just see how they think about things. And you say, well, tell me, how do you make money out of equities? Right, just a simple question. How do you make money out of equities? And the smart aleck will say, well, you buy low and you sell high, right? But okay, beyond that, how do you make money? I have to know something the market doesn't know. Right, and I promise I cannot tell you anything about large cap companies. In my view, the market doesn't already know. They're super smart people. It's covered by 100 analysts, and it'll be super efficient. So you're then down to macroeconomics. As Galbraith, the economist, said, the only point of economic forecasting is to make astrology look respectable, right? And so you don't know. So if I'm going to work hard and I'm going to invest in quota companies, I want to invest in small cap companies where I know every unit of energy I put into that is going to give me an unfair competitive advantage. I will know something the market doesn't know. And so actually, from a small cap perspective, I think small cap fund management, I think over pretty much every single time period, has outperformed every other asset class. Now, the regulator and everyone else would tell you that's high risk. I think the data would probably suggest it's not quite as on a risk reward basis. That's not the right way to think about it. But then there's the overlay, as you rightly say, which is, if you put the capital to work in sectors and industries where you're going to make a difference, I think you'll deliver much better returns over the long run. And the reason I say that is, so I have 3 children. If I talk to my children, I ask my children, what kind of company do you want to work for? They will say, I want to work for a good company. Good, right? And there's not an Excel spreadsheet telling you what's good. They already know what's good, right? The world is now so transparent, I can see through you, not just what you do, but how you do it, right? Every company is now beholden to their customers and their employees in a way they weren't 20 years ago. And that's one of the big advantages of technology. And in that world, behavior becomes everything. Yeah. So, there's just a great big opportunity to build a very different kind of company, and one that thinks about its customers and its employees in a different way. And for us, part of that is how we allocate the capital. We're going to allocate capital to good companies. We are a B Corp. And if you don't know what a B Corp is like a fair trade coffee stamp, but for companies. And you have to hit a certain benchmark to become a B Corp. It's really, really difficult to hit. And then you get assessed every 3 years to see how you're doing against it. It's kind of companies like Ben and Jerry's Ice Cream, Patagonia. We're one of the largest B Corps now, and it's cool because it's an independent assessment. Every company will say they're good, but very few of them, in my experience anyway, very few of them actually are. And again, it's nice if you can get that, if you get that bit right. And I think you'll make the best returns by doing that, because I think you're driven by customers, employees wanting to give their loyalty and their allegiance to companies which are fundamentally doing the right thing.
Just shifting gears a little bit, Octopus Money. So you got this thing going. What's the vision there, and how does that sit with everything else the group's doing?
So I think within the financial advice space. So if you speak to most financial advisors, they'll say, look, how many customers can an individual advisor look after? And that answer will normally come back somewhere between 100 and 150. I think technology actually is an enabler would increase that number quite substantially. And you say, and what's the average client size? And the average client size, I don't want to be across the industry, but even the people right at the very bottom will say £150,000 of investable assets, and normally it's a bit higher than that for lots of firms. Right? That is a very small percentage of the UK population who sit in that bucket. So there's a whole raft of people, and that's almost like you're helping rich people or wealthy people become richer and wealthier. There's nothing wrong with that. That's a good thing, and they really need that help. But actually, if you look at money and finance is the number one cause of mental health problems in the UK by a mile. And who is giving this kind of mass market, normal people, who's giving them that advice and that help? Who's giving them the guidance, right? Because you can't get it from the computer. The computer won't give me empathy and understanding. I can't diagnose myself. It'd be like me having something wrong with my health. I always do it. I go on Google, I diagnose myself. I always come away thinking I've got something awful. And then I go and see my doctor and she tells me what's actually wrong with me. And I go, oh, thank goodness for that. And so Octopus Money is a coaching, is through workplace, and it's coaching normal people. So people who will not be looked after by financial advisors or wealth managers, normal people, and it's doing that, and typically doing that by trying to engage in life events, because life events are the bits that customers understand and can relate to, right? It's why mortgage advisors' offices are full of flowers, whereas financial advisors are not, right? Because the house move and the mortgage matters to me. And right, the pension or investments are more difficult to understand, right? What matters to you? Divorce matters to you, death matters to you, retirement matters, changing home, having children. All these things matter, and it's those life events. It's centering the guidance and the advice around those life events would be really exciting, and that's what we're trying to do. But we're trying to do that for a population, in a part of the population which is not catered for at the moment, or not catered for very well. Is how we're thinking about things. And that business is run by Ruth. She's very, very, Ruth, she's super smart, she's super capable, and she will most definitely build a company that you want to be friends with, right? That starting point, which is the core values and its DNA. So, it's very early in its life, but I think there's a big potential for that business.
Yeah, and a few people have tried to crack this, but mostly from a point of view of kind of investments, whereas you're approaching it from a more holistic, coaching point of view. And as to your point, only an entrepreneurial private company would take that kind of very long-term view. So I'm very excited.
I think most of it, if you look back, you'll have followed all of this. So lots of the robo-advice businesses, you're solving the wrong problem, right? So you think that you think the population in the UK is financially illiterate and actually is just looking for a digital investment experience, right? That's not true. They're not, right? And by the way, the pricing of your offer is not competitive. And so you're wrong and wrong. Actually, what people need is they need a human. They need empathy and understanding, and they need encouraging, and they need coaching. Right, so a person has to be at the heart of it, and you need to be using, again, back to the same point, you need to be using technology in a different way. If you want to emerge as one of the winners in any industry over the next 10, 20 years, if technology is not at the heart of your business, you will not win. Full stop. End. No chance. Zero chance of winning if technology is not at the heart of your business. You can't do it. And that's been shown in almost... We experience Amazon every day of our lives. Right, and is probably the poster child of efficiency for a business. And what I'm saying is, you need to build Amazon, but you need to build Amazon with a soul and with a heart that does the right thing. I think Amazon, absolutely admire it. It's a wonderful company. Would I be friends with Amazon? Less sure, right? Less sure. And I think it's the combination of both is what you want. You want ruthless efficiency and amazing technology, and then you want a heart which makes you human. Which makes you say, yeah, I want to be friends with them. They do it really well.
Simon, I want to be respectful of your time, so I've only got you for a couple of minutes. But I have kind of my last few questions, 2 or 3 questions I want to throw at you. They are more personal, right? So, right. Someone said to me the other day, "Oh, Simon Rogerson is probably a billionaire." And I went to go and look on the rich list. Why are you not on the rich list? Oh, are you there? I didn't see this.
Well, do you know what? I certainly hope I'm not. And that stuff makes me feel a bit uncomfortable. Actually, I am. I think I said earlier on. Like, I'm extremely fortunate, right? I'm extremely fortunate, and I have, I have a lot of money. All of that money is tied up in Octopus. Like, so, every single year we've had one of these liquidity events, I've just bought more and more and more shares, and and I've never sold a single share in Octopus in 24 and a half years, 24 and a bit years, and I don't want to, right? Because part of it is being part of something. Part of it is leaving some form of legacy without sounding too odd about it, and build a business that my grandchildren are part. I'm kind of I'm proud to talk to my grandkids about, and so I was building that, and I think value comes out of that, and whether I'm worth a great big number or half of a great big number or whatever it is really not that relevant, other than what am I going to do with that money. Right. And that, I think, is really, it's what I talk to my kids about. With a lot of money comes an awful lot of responsibility, right? Responsibility in how you behave towards other people, right? So just as I think Octopus is very privileged to be looking after whatever it's 13-14 billion pounds of our clients' money, right? And we're trying to point that money at parts of society that need improving, where we can generate great returns. That's how I think about my own personal wealth, which is that what am I gonna do with it, right? And I desperately hope that Octopus we're really transparent as a company, so I'm very open about what percentage I own of the business, and pretty open.
Yeah, I mean, it's all on.
It's all there for people to see. Yeah. I just hope nobody ever pieces them all together and says, "There you go, that's what you're worth, and it's a great big number." Because it's not. It doesn't. I hope. I hope it never changes who I am. Right? There's a ratio I use when I'm interviewing people, which is how good you think you are, divided by how good you really are, right? And when that ratio is more than 1, you're unemployable, right? And I think often people who've made an awful lot of money, they start to lose sight of stuff, right? I've been exceedingly lucky in who I've met, and I know you make some of your own luck and everything else, but I've been very, very lucky. I feel very, very fortunate, and out of that, I happen to be quite wealthy. But what are you going to do with it? And does that make me better than anyone else? Definitely not, right? I'm lucky. But I'm still Simon, right? I work in reception. In Octopus because if I worked in the main floor or in an area, people would probably be too scared to come and talk to me, right? And they think of me as the CEO rather than just Simon. All right, just think of me as Simon. I'm no different to when I was, knee high to a grasshopper. I hope I haven't changed very much. And what's important to me and what I value and what I care about doesn't change through money. And I think it's very easy for me to say all this, right? I recognise that. But money will not make you happy. It will give you choices, but I'm no more happy today than I was when I literally had, I didn't have 2 pennies to rub together when we started the company, and I was just as happy. Anyway.
The other question I wanted to ask you was, if you met that 24-year-old Simon,
yep,
what advice would you give him? What would you tell him?
That is a really good question. I would probably give him advice on how to hire really good people, because that's a lesson I learned the hard way for quite a few years. So I interviewed every single person we hired until we were 500 people in size.
Wow.
So I used to spend 40-50% of my time interviewing people all the time. And I eventually got pretty good at it because I worked out what was important to Octopus and to me in the kind of people I hired. But I didn't know that right at the very start. And I used to spend too much time and put too much weight on someone's functional expertise. So were they expert what we wanted to bring them in to do, as opposed to did they share our values and were they going to behave in the right way? And that to me is the single most draining thing in my life, is when I'm working with people who I don't enjoy their company and they don't share my values. So I have that like a diary test. If I look down my diary and I'm looking at my day and I've got a meeting when I groan and I go, oh God, right, that person shouldn't work at Octopus. It's not good for them. It's not good for me. It's not good for the business. So working out how to interview people to work out, are they going to fit in Octopus? Because you can't train values into someone. You can't train behaviors. You can train functional expertise and competence, but you can't train values. I would have told little Simon, I would have said, look, this is how to do it. These are the questions you should ask. This is what you should care about. And this is how to do it. And now I can do it in 15 minutes, probably. Yeah, you can work someone out. And be right 8 times out of 10. Not always, but 8 times out of 10, you'll be right.
Any final thoughts or key takeaways you want to leave our listeners with?
I'll talk briefly, and whether this is appropriate or not, you'll be able to shut me down. But you can edit it and change it. Is as companies scale, right? So you know this firsthand because you're building it, right? As company in the early days, companies are very happy to take risk. Right, they're very happy to make decisions. They're very happy to trust their gut. This normally comes from the leader and the CEO of the organization. This is what we're going to do, and that introduces an urgency, a restlessness, and not renegade as in out of control, but we're going to do this thing and it's going to be different. And I love that. Right, that gets me going. As businesses get bigger and bigger and bigger, you start to lose some of that, and you start to lose it because you naturally spend more time protecting what you have than you do focused on the new stuff. One thing we did, which is probably the coolest thing Octopus has done as a company, is about 5 years ago, we introduced something called Octopus Springboard, which is for employees here. Where you say to employees here, if you have your own idea and you're thinking about leaving to set up a company, come and pitch it to me. And if I think it makes sense, we'll give you 40 or 50 grand off the balance sheet to go and set your business up. And if it doesn't work in the first 12 months, you can come back and have your old job back. Right? And there have been 8 or 9 people that have gone through that now. One of them's come back to Octopus, and he's already pitching his next idea. Actually, I said, you only get to do it once. But because it's not fair on everyone else, not because I don't believe it. Because they're way more valuable having tried and failed than never having tried at all. Yeah. But that for me, and it's trying to encourage people to say, look, people won't take risk, not because of the risk of failure. It's the sense of embarrassment they feel in front of their colleagues, because this is what the educational system's done. It is, big red marks from when you were teenagers, like, oh, don't take risk, I'll look silly. No, it's not. I look silly all the time. I make zillions of decisions which are wrong, but I'm okay with that. And it's trying to reintroduce that back into a company is really, really important. So, as a lesson to people building businesses, that's one of them. The other one I've already said, which is it's about behavior, right? Everyone will talk about outpricing, outsmarting, outcompeting when we're sitting in board meetings. Talk about outbehaving. When you outbehave the competition, you'll win every single time. Right, because it's why people choose friends. Right, you choose businesses on the grounds of how do you treat me, how do you make me feel, right, when things go right or things go wrong, and that's a mindset, and that's very difficult to compete against if you get it right.
It's been such an honor talking to you. Thank you for being so forthright and down to earth. Thank you for making me feel comfortable. And thank you for sharing such wisdom with us on the podcast. Simon Rogerson, thank you for your time.
Cheers, Aram. Thank you.
That's a wrap on today's show. Massive thanks to my production crew, especially Jake Osha, Melissa Canham, and the entire team. And of course, to our sponsor, Timeline, the market-leading provider of integrated planning technology and model portfolio service to advisors. I do hope you've enjoyed today's show. Head over to Apple Podcast and give us your review there. Until next time, goodbye.